Welcome back to Investing Talk Podcast. Today, we're going to be focusing on a single stock, and that's Bank of America, ticker symbol BAC. Now, the stock has been down recently, like about 1.86%, but Bank of America actually just killed it in Q4 of 2024.
Yeah, it's pretty remarkable. They posted a 47% profit surge, really exceeding, all analyst expectations.
Yeah, let's dive into that for a sec. We're talking a profit of $6.67 billion with earnings per share of 82 cents. Analysts were kind of thinking more along the lines of like 77 cents.
And a lot of that was really driven by their investment banking division.
Yeah.
But also, just a really favorable interest rate environment, which is boosting their income.
Yeah. So even with, the recent volatility that we've seen in the market, this earnings report is a big sign, for you, the listener, about Bank of America's fundamental strength. But, the stock price hasn't been completely, sunshine and rainbows.
Right. And that's where things get a little bit more, complex, I guess. We're seeing some, mixed signals when we look at Bank of America's recent price movement.
For sure. So is this recent dip like a buying opportunity, or is there more to the story? I mean, what can some of the technical indicators tell us?
Well, for one, the stock is currently trading above both its 50-day and 200-day moving averages, which, generally are considered to be bullish signals.
Okay, that does sound promising, but I know there's always more to it than that. What else can those indicators tell us?
So the RSI, or the Relative Strength Index, is currently sitting at 59.08, which is in neutral territory. That kind of suggests that the stock isn't overbought yet, meaning there's, potentially some room for further price growth. However, the MACD, or the moving average divergence, is kind of painting a little bit of a different picture there. It's giving us a little bit more of a bearish signal at 0.37.
So the MACD's hinting at a potential slowdown. What does that mean for someone thinking about investing in Bank of America right now?
Yeah, so essentially what it means is that the short-term price momentum is kind of slowing down compared to the long-term momentum. So it could, suggest a potential price pullback or something in the near future. So you might want to wait for a clearer upward trend, before investing.
Interesting. So we've got some mixed signals from those technical indicators. But there's another big thing, that could significantly impact Bank of America's stock price, and that's interest rates.
Yeah, the market has been super sensitive to, every word from the Fed regarding interest rate changes.
Oh, for sure. It's been a wild ride. But, analysts are now predicting only one more rate cut in this cycle, which could actually benefit Bank of America.
Yeah, exactly. When interest rates kind of stabilize, banks can better predict their income from loans. And, it allows them to optimize what's called net interest income, or NII, which is basically the difference between the interest they earn on loans and the interest they pay on deposits. Stable rates just lead to more predictable and potentially higher net interest income.
So that stability would give Bank of America a clearer picture of their earnings. But what kind of impact are we really talking about here?
Well, analysts are estimating that Bank of America's NII could hit a pretty massive $62.3 billion in 2025, which is a 10% increase compared to this year.
Wow, a 10% jump. That is substantial. So even with, the mixed signals that we're getting from the technical indicators, this potential boost from stable interest rates adds another layer of intrigue to Bank of America as an investment.
Absolutely. But, beyond just earnings and interest rates, Bank of America has also been making some, pretty strategic moves that have really caught the attention of investors, one of the most notable being their share buyback program.
Right. They announced plans to repurchase up to 25% of their outstanding shares. What is the strategy behind such a massive buyback?
Well, share buybacks are often seen as a signal of confidence from a company. It's like they're putting their money where their mouth is, investing in themselves because they believe that their stock is undervalued. And by reducing the number of outstanding shares, they can potentially increase the value of the remaining shares, which obviously directly benefits you as a shareholder.
Makes a lot of sense. Now, there was another strategic move they made that I wanted to touch on. They redeemed $1.5 billion in senior notes. Can you explain what that means and how it kind of fits into their overall financial strategy?
Sure, yeah. This move is really all about responsible debt management. By redeeming those notes, Bank of America reduces its overall debt load, which makes the company financially healthier and generally is perceived very positively by investors.
So they're showing strong earnings, a commitment to shareholder value through the buyback program, and they're managing their debt really well, but they're not just focused on the numbers. They've also made a splash recently with a major partnership.
Oh, you're talking about their new partnership with the U.S. Soccer Federation?
Exactly. Now, this might seem like a little bit of a curveball to some, but it's a strategic move, you know, focused on brand visibility and long-term growth. It's about connecting with a wider audience and building brand loyalty, not just chasing immediate profits.
Yeah, you're right. It really shows that Bank of America is thinking about, the bigger picture
Right.
and how to position themselves for success in the years to come.
So we've covered a lot of ground here. Strong earnings, mixed technical signals, strategic moves, and even a, foray into the world of soccer. But what about the future? What potential opportunities should investors be watching for with Bank of America? And, are there any red flags on the horizon?
So, there's one key aspect, I think, that often gets overlooked when people are analyzing a stock like Bank of America.
Okay, what's that?
It's their efficiency ratio. This metric essentially tells us how well a bank is managing its operating cost relative to its revenue. So like a lower efficiency ratio generally indicates, stronger profitability.
So are they running a tight ship over there at Bank of America?
Well, they've actually made significant progress on this front in recent years. They've streamlined their operations, embraced new technology, and even, strategically reduced their physical branch footprint, all of which contributes to a lower and more favorable efficiency ratio.
That's good news for investors. It means they're squeezing more profit out of every dollar of revenue. But efficiency isn't the only factor driving profitability, right? What about their return on equity?
Oh, absolutely. Return on equity, or ROE, is a crucial metric for investors because it tells us how effectively a company is using the money invested by its shareholders to generate profit. So a higher ROE generally indicates a higher level of profitability and suggests, effective management.
So how does Bank of America's ROE stack up against other major banks?
Well, Bank of America's ROE has been steadily improving, and it's now right in line with, and in some cases even slightly better than, the average for other major U.S. banks. So this indicates that they're using their capital wisely and delivering, solid returns to their shareholders.
Okay, that's definitely a positive sign. But, of course, we need to be realistic, and consider potential downsides or challenges that Bank of America might encounter. What are some of those risks?
Well, one inherent risk for any bank is credit risk, which is essentially the possibility that borrowers will default on their loans. If people and businesses aren't able to repay their loans, that obviously impacts the bank's bottom line.
Makes sense. So how exposed is Bank of America to this credit risk?
Well, like all major banks, they do face some degree of credit risk. However, Bank of America has been very proactive in managing this risk by, implementing careful underwriting practices and diversifying its loan portfolio. So they're being very selective about who they lend to and spreading their risk across different types of loans and borrowers.
So they're not just, throwing money at any borrower that walks through the door.
Exactly. They're taking a much more measured and strategic approach. And they're also, closely monitoring economic conditions and adjusting their lending practices accordingly.
That sounds like a smart strategy for mitigating risk. But even with, the best risk management practices in place, external factors can always influence a bank's performance. What about the regulatory environment? How might changes in regulations impact Bank of America?
Well, the banking industry is, heavily regulated. And any shifts in those regulations, even seemingly small ones, can have a pretty significant impact on banks' operations and ultimately their profitability.
So investors need to keep a close eye on any new rules or regulations coming out of Washington that could affect Bank of America.
Absolutely. For example, changes in capital requirements, which dictate, how much cash banks need to keep on hand, or changes in stress testing, which evaluates how banks would fare during an economic downturn, could impact Bank of America's ability to lend money or make investments and therefore affect their earnings.
Okay, so we've got credit risk and potential regulatory changes to keep in mind. What other challenges might Bank of America face moving forward?
Well, competition is a constant factor in the banking industry. Bank of America faces competition not only from other large banks, but also from regional banks and even non-bank financial institutions that are offering similar services.
Yeah, it's a crowded playing field. So Bank of America can't just rest on its laurels. They need to be constantly innovating and finding ways to, stand out from the competition. What are they doing to stay ahead of the curve?
Well, they've been investing heavily in technology and digital banking, understanding that today's consumers expect convenient and accessible banking experiences, which, helps them attract new customers and improve satisfaction among existing ones.
Yeah, that makes sense, especially in today's, fast-paced, tech-driven world.
They've also been strategically expanding their wealth management services, which is a smart move because wealth management is a high-growth, high-margin business.
So they're not putting all their eggs in one basket. They're diversifying their revenue streams and catering to a wider range of customer needs, which is a smart growth strategy. But, with all these moving pieces, it can be tough for the average investor to keep track of everything. Are there any key metrics or ratios that we should be paying close attention to when evaluating Bank of America's performance?
Yeah, there are several key metrics that can provide, valuable insights into a bank's financial health and overall performance.
Okay, give us the rundown. What should we be watching?
So one crucial metric is the net interest margin, or NIM. This measures the difference between the interest a bank earns on its assets like loans and the interest it pays on its liabilities like deposits.
So a wider NIM generally translates to greater profitability for the bank.
Exactly. Another important metric is the loan-to-deposit ratio, which tells us what percentage of a bank's deposits are being loaned out. A higher loan-to-deposit ratio means the bank is putting more of its deposits to work, generating income.
So that sounds like a good thing, right? The higher the ratio, the better.
Well, it's a little bit more nuanced than that. While a higher ratio does indicate that more deposits are being used to generate income, a very high ratio could also signal that the bank might be taking on excessive risk. It's about finding that balance. Another important metric is, the efficiency ratio, which we discussed earlier. And of course, we always need to keep an eye on the fundamentals, earnings per share and return on equity.
Wow, a lot of numbers to crunch.
Wow.
But it sounds like understanding these metrics can help investors gain a much deeper understanding of Bank of America's financial position.
Absolutely. By analyzing these metrics and comparing them to industry averages and historical trends, investors can gain, valuable insights into the bank's strengths, weaknesses, and overall trajectory.
Okay, so we've covered efficiency, profitability, potential risks, key metrics. Before we wrap up, there's one more topic I wanted to bring up. Bank of America has been making headlines lately for its commitment to environmental, social, and governance, or ESG principles. What's the story there? And how might this impact investors?
Yeah, that's a really important question. ESG investing has become increasingly popular. As investors look to align their investment portfolios with their values, people want to invest in companies that are not just focused on profits, but are also making a positive impact on the world.
Exactly. So how does Bank of America stack up in this regard? Are they walking the walk when it comes to ESG?
Well, they've actually been a leader in ESG investing. They've publicly committed to reducing their carbon footprint, supporting renewable energy, promoting diversity and inclusion within their company, and investing in underserved communities. So they're not just talking the talk, they're taking concrete steps.
Those are some impressive goals. Are they backing them up with real action?
Yeah, they've set measurable targets for reducing their greenhouse gas emissions. And they've put significant capital behind renewable energy projects. They've also received accolades for their efforts to promote diversity and inclusion within their workforce, particularly at the leadership level.
So they're putting their money where their mouth is when it comes to ESG. But how does this impact investors? Is there a financial incentive to investing in companies that prioritize ESG?
That's a complex question, and the answer isn't simple. Some studies have shown that companies with strong ESG performance tend to outperform their peers over the long term, which suggests that, doing good can also be good for business. However, it's important to remember that ESG investing is still a relatively new concept. And there's no guarantee that companies with strong ESG performance will always outperform those that don't.
So it's not a foolproof strategy.
Yeah.
But a factor to consider alongside, the financial metric.
Exactly. ESG performance can provide additional insights into a company's long-term sustainability and potential for growth. But it's just one piece of the puzzle. Investors need to do their due diligence and carefully consider all relevant factors before making any investment decisions.
That's sound advice. Welcome back to Investing Talk Podcast. We're wrapping up our look at Bank of America, ticker symbol BAC. We've covered their earnings, interest rates, ESG initiatives, and some key metrics. So what does it all mean for you, the investor?
Yeah, with all this information out there, what are the key takeaways for our listeners when they're considering Bank of America as a potential investment?
Let's cut through the noise and really highlight what's most important. What should investors be focusing on?
Well, I think first and foremost, Bank of America is a fundamentally strong institution. I mean, their recent earnings report just totally blew past expectations. It shows that they can generate significant profits even when the overall economic environment is, a bit uncertain.
Yeah, that 47% profit surge in Q4 really got everyone's attention. It's a clear sign they're executing well.
Absolutely. And, beyond just the strong earnings, they're also taking steps to really, enhance shareholder value, that massive share buyback program we talked about, as well as their efforts to manage their debt effectively. It's definitely sending positive signals to investors.
Those are definitely points in their favor. But, let's be realistic. The stock market is never a sure thing. There are always risks to consider.
Of course. Interest rate movements, for example, are a key factor to watch, while some stability on that front could be beneficial for Bank of America. Any unexpected rate hikes by the Fed could put pressure on their margins.
And we can't forget about the competition. Bank of America is operating in a very competitive landscape. They need to constantly innovate and adapt to maintain their edge.
Yeah, but here's what I find really interesting about Bank of America. They're not just focused on short-term gains. They're making these significant investments in their future, putting resources into technology, enhancing their digital banking platform, and like we discussed, committing to those ESG initiatives.
It sounds like they're taking a long-term approach to building a sustainable and successful business. So what's the bottom line? What's your overall take on Bank of America as an investment opportunity?
Well, I think Bank of America presents a very compelling option for investors seeking a combination of growth potential and stability. Their strong fundamentals, strategic initiatives, and commitment to the future make them a stock worth considering.
That's a great summary of our analysis. But as always, we encourage all our listeners to do their own research. Consider their personal risk tolerance and consult with a financial advisor before making any investment decisions.
Right, the stock market is inherently unpredictable. There are never any guarantees. But by staying informed, thinking critically, and making well-considered decisions, investors can increase their chances of success.
Great advice. Thanks for joining us for this look at Bank of America on Investing Talk podcast. We hope you found it informative and helpful as you navigate the world of investing. Don't forget to subscribe to our podcast, share this episode with your fellow investors, and leave us a comment with your thoughts on Bank of America. We always love hearing from you. Until next time, happy investing.